learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your Watchlist coming in at September 10th, 2020, and I have my stock market prediction for September. This is going to be a little bit interesting of a watch list, but I want to pretty much explain what I'm expecting for the rest of this month. Based on what we see today, we kind of got to see what happened with the market today, telling us was it further correction or not. We are still about 8% off of the highs. This is actually the fastest correction from the highs in history. So again, you're at all-time highs. It doesn't look really that weird, but to go from all-time highs to a 10% correction, this is the fastest that it's ever occurred. So another thing to add to the list for 2020, but this is shaping out to be an interesting September. So I want to go over that, what happened in the stock market today, what we are looking at for tomorrow. I got the plays, I got the keys, all of that good stuff, and that is pretty much it. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/thestockmarket. You can post the plays, see the plays, watch the watch list come to life, and yes, it's lit. Straight up. If you are looking for a place to talk about deep financial concepts while at the same time arguing about whether or not McDonald's is something you should eat, it's good, oppression food, I don't know what you want to call it, then maybe we should see you there. Get you a Chad that does both, baby girl. And the most important thing you need to do, post your watches below. Let us know what you're looking at. Got any plays, comments, remixes, anything. Post them below and source that info. Shout out to Chad, baby. But right off the bat, I am calling this the Cuckening 2020. Watch the premium with options, but a lot of you are asking, what does that mean? Pretty much, I'm expecting there to be a lot of movement in September, but going nowhere. So this usually has a direct effect on options premium. It is a difficult environment to trade. Now, thankfully, I have an example or a visual example on the charts, a time period I could show you guys, but here is my September prediction, and to put it into words for you, I'm expecting a mini bounce from here. So we saw this 10% correction. I'm expecting some level of mini bounce, then another negative downward reaction that will lead to a slightly lower point to then where we were at from yesterday. We're going to hit a slightly newer low and then finally bounce back up from there, and it'll eventually go up. Now, I'll show you on the chart what I'm talking about, and now this will take the whole month to play out. So we may be a little premature on the prices and where we're at now. Again, a lot of people are still talking, just as we talked about yesterday. Is this a further correction? Is this over or not? But a few good examples to show what I'm talking about was pretty much last year, 2019. This was August, but it was something like this where you're going to see kind of a quick and fast low, quick, fast bounce off of it. That may last for a couple days. Then it'll come down. You might see it close there, or it might just be a wick, and then it'll keep going up from there and finally level out. This was August 2019, but now another example is the beginning of the year, this kind of right here. So I'm just showing this so you guys could kind of visually see it. Again, this is just the chart showing you the prices. We are looking for things that cause the price movement, not really looking at this chart to kind of just play out like that for no reason. So that's why we're keeping this in mind. We talked about it, even the factors we've been looking at. Everything kind of took a chill pill today and relaxed. Now, that kind of leads to the keys here, because what you saw today was a rebound in tech, but we're still down about 8% from those highs, no longer about 10 or 12. But you really need to watch the winners and losers. So now even back to what we saw today, here's like Walmart. You could see that was 1.5%, but the overall SPY closed 2%, and the NASDAQ was almost 3%. So this Apple effect, these big movers, again, what we've been seeing lately, that hot money per se, or just the overweighting of tech, you're still witnessing that occur. So that is very important, how it's kind of overshadowing things and amplifying moves and kind of muting some other ones. But you could kind of see with stocks like Walmart, even McDonald's, we played these, they were doing really good, and then all of a sudden they didn't close as much. They lost about 1%, whereas you see the overall S&P, it's kind of like Apple, where they just gapped up a lot more. So, but the overall trend was kind of upward rather than just gapping up and closing off and leveling off. But what I'm trying to say is that this right here, at the end of the day, this was kind of the value stocks, but the SPY didn't take that big of a hit because the carrying from Apple as well as all of the other tech stocks that did good. This was one of the best days for tech now since April. So a lot of movements. That's why there's going to be a lot of volatility. And again, back to the cucketing, just watch the premium. If I'm expecting September to play out like this, again, I could be wrong and it could be very early for all this, so we'll see. I'm just throwing this out there. But that is, again, more broader as far as everything. Even for today, there's that Microsoft TikTok news, and now there was this news, and this affected stocks. We had our plays on it. We even played some of the put side. You saw Walmart get hit more than Microsoft. I think that is going to be important. There is a deadline on September 15th, or a deadline the president put on the deal, if you guys remember that. But at the same time now, the news was very interesting. And what makes the news so interesting is simply the fact that it seems like a regurgitation from almost a year ago. So it's pretty much interpreted that the deal isn't going to go through. That's kind of how we took it. But the news that came out today was that ByteDance is pretty much talking to, or TikTok is talking to the U.S., the government, and that's related to CFIUS. And we're going to talk about that. But the news was them not having to divest assets, but pretty much the exact same headline came out about a year ago related to TikTok. This is from a Reuters article 10 months ago in January, but U.S. opens national security investigation into TikTok. They've been going on about that, but this was the exact headline, give or take a few words, that came out today. It was CFIUS is in talks. Instead, they said the U.S. CFIUS is the Committee on Foreign Investment in the United States. And it said they're in talks with TikTok about measures it could take to avoid divesting the Musical.ly assets it acquired. And remember, Musical.ly was TikTok, or TikTok was Musical.ly. It's confusing. So that really didn't lead into anything. And that's why I think it's interesting, because we don't know anything else about this deal. Again, we've talked about why it's probably not going to go through. However, watch for that effect and watch to see if that's pricing more or less on some stocks. Again, Microsoft, Walmart, Oracle, and those that have kind of been involved. But I want to see how this is impacting the market, because I feel like it shouldn't, but it is. So that's why I'm kind of following it a little bit more closely here. But we will see. And then finally, just kind of an update in the broader scope here of September. The stock market in this next 3 months predicts the election. It's like an 87% success rate if you look in the past, but pretty much based on the average of these next 3 months, the 3 months before the election, if the stock market is up, the incumbent, the president that is already in office, usually wins. If it is down, then there's a new president. So you could go look up at that, look into that, whatever you want, but keep that in mind, and just keep that in mind with timing, because we have a lot of different things. Again, we saw the negative vaccine news yesterday, but watch how that's going to affect time, and just keep that in mind for September. But I hope you are ready for tomorrow and the rest of this week. It still is going to be exciting, but that is pretty much it. So let us get into the plays. So right off the bat, we have a lot of different plays. McDonald's calls. They went straight up. But no, I made a play on this, and I like it for two aspects. Again, the value kind of rotation here. We were talking about this yesterday, and this is a criteria that I like. This was part and part the main reason why I got it, especially even with Walmart. But remember, I was talking yesterday when stocks over this last 3 days, you saw a big move on the indexes and with some individual ones, but some stocks this last 3 days kind of just kept them at a range they were already at, in a higher range at that. So we went for McDonald's calls. And then another reason why I bought them today was because that Travis Scott burger was coming out. A lot of people were talking about it. You kind of saw it everywhere. And I figured there would be hype around it. What I'm pretty much expecting is kind of a random update news that it looks like it might do good, or I'm assuming. And again, I have my other reasoning in place to play some of the momentum and value rotation, but I wouldn't be surprised to get an update from McDonald's that they sold X amount of million burgers or whatever for it, and that leads people reacting very, very positively to that. So that's the reasoning why. But now as far as the play, I bought right in the morning, again, literally within 1 minute, taking advantage of that early premium. And if we even look at kind of the market and how even the market played out, you could see how that minute was kind of advantageous. But I got October, so I got time, because again, value rotation, if this is going to be a cuckening back and forth, time is better. Time is more expensive, but we talked about it. If there is going to be a cuckening and there is going to be a lot of big movements, but the stocks go nowhere, you need to get in the money. Doesn't mean you sell credit spreads. It could be a little bit more favorable. Just make sure you get a lot of premium for it, which is going to be the hard balance to find. But try to get closer to the money. I got October, so time a little further out the money, but I got 20 of these contracts at 26 cents. But as far as even justifying it, again, with that whole morning thing, the idea was, looking at the prices of these contracts, I wanted to pay pretty much the same amount or not pay too much of a premium. And McDonald's was slightly up, but the overall market, most of that move, there was a bigger gap up there. So at 26 cents, I got those 20 of them. I was able to pay just right at where they closed. Again, it's still a little bit expensive, but again, you could even see that with the underlying McDonald's overall, it's just been holding up there. So I got those, and I don't know how long it was, about almost an hour I held them, and I sold 10 out at 50 cents. It seems, and this is what we even talked about middle of the day today. So like right here at like 10:27 is when I sold out of those. You could see we got 50 cents for the contracts, and they even kind of peaked out and dropped from there, but they went up so much because one, the stock went up a lot, but it also did that pretty much within the first hour of the market. So in 1 hour, it moved $2, but now for the rest of the day, this is where we talked about the contracts started to decay because it went up, but even though it didn't go down, the contracts will slowly decay over time because that velocity is changing. Think implication and expectations. It moves $2 in 1 hour. You're like, wow, it could keep moving $2-3 more. You're going to be willing to pay more for the contracts, but hour goes by, 10, 20, 30 minutes. As that adds up, it stops moving at that pace. The value and expectations, the pricing of those contracts, especially if they're out of the money, it's going to drop in value. So that's what we saw with those. We got to make those free, still holding those. That was the first play in the morning, and now the next play is these Walmarts. I got those shortly after, then like 3 or 4 minutes after, again, took advantage of the morning, and same logic I was talking about. I brought these up yesterday on the watch list where last 3 days they've dropped, but they're still higher. And then again, there was 2 pieces of news. One, TikTok, as well as the monthly service they were looking to add there, that like Amazon Prime competitor. So you got to get that news pretty much at a discount in some decay. And remember, we played both ends of there. So I thought this would be a good play. I wanted to make these free. I could have, but I felt like every time I'm making one free and I'm getting greedy with the other one. But clearly we're seeing you should be making them free. It works every single time. But I got 50 of the October 200 calls. And this is further out the money, but what do we pay? I think we got 50 at 26 cents. They ended up going up, but again, at 26 cents, you see I'm not paying a premium compared to the day before, and especially these contracts. Remember, Walmart with the news, they were up a lot. So if these are further out the money and the velocity on the stock stops moving as it was a few days ago, they still have a bigger floor to drop. These aren't really the cheapest they've been yet, so there's still some risk. However, it's getting, again, like I'm saying, I'm getting to play the same exact news now for a lot cheaper. So it has a decent amount of time. We're still in that. I could have sold out of them. I didn't. Pretty much we were doing really good on the contract. The contract was golden. It held up a decent value. You could have really quick flipped them if you wanted to. They had little quick moves throughout the day, but they just dropped right at the end. They were holding up pretty nice, but still in that whole position. We're going to ride that one out. I'm going to see. And then finally, there was the Microsoft. In response to that news, I played the Microsoft puts. You would have made more money going for the Walmart weeklies, but I went for the Microsoft weeklies. We were a little late, and I was kind of thinking to justify the fact that I had the Walmarts. I should have probably strangled the Walmarts. I keep going for the Microsofts, but I was a little late to the party. I think I paid 18 cents. See, I was late on here. So I was not the first one in on this. Again, they were all going crazy, but these ones they had a much higher premium. I think I would have had to pay 30 cents for the next one above. So I was like, all right, well, let me try to get some quantity. Got them at 50. I sold out, but even the timing on here, look at the underlying. This has to do with, again, velocity in the weekly, even though it kind of closed there at the end. We got out at 351, and that was right there, right before it started to bounce up. They were still going at a gain. I think I got some out at 25, only a little bit, but most of them ended up filling at 23. But even though the stock came down, the options didn't go back up, and you could see that on the chain, and this is why I look close to the money and out the money. The closer to the monies went up, or they kind of came back up, but the ones as you start going further out the money, it got less of that rebound, less and less. You pretty much ended at a loss. So this is what's going to happen one weekly and being really out of the money with no time. But those are the 3 plays I made today. I mean, with that being said, I'm going to be looking at all of these even for tomorrow if there is any sort of continuation off of this. The only thing I don't have that I want, they started to move up a little bit, Microsoft calls, but then we would be kind of fully strangled on that play. And you got to be even careful playing both ways in this market. You need to get in the money. It's not about just playing the direction out of the money, but you either got to make it free, take the profit while you can, or get in the money. So that's why I'm going to be focusing on plays around that. I will be looking at a few other stocks just in case. We will be keeping it pretty broad tomorrow. One of those is going to be NVIDIA. They had a move, and like I'm saying, you just got this premium decay. You got all these movements. A lot of these contracts now might have some contracts that didn't go up too much. So I'm going to be watching NVIDIA. We have those LCAs. I'm holding them. They're starting to break out again. That met that criteria of these stocks holding up while the market's been dropping. We like them. I like the Walmart better than most of the plays, but still will be watching how that TikTok news affects it. Again, even McDonald's as well too. AMD, it's came up a lot, but it's also holding that plateau. You've been seeing that even with stocks like Snapchat. I've been liking that a lot lately. So any of those have been good. Again, Ulta, we talked about that, but same sort of philosophy. Any of these stocks holding up, these are the ones catching my attention. So watch them. Watch the Dow components doing the same thing. Honeywell is holding up. I like that. I may want to see if we double dip. Remember, we took a lot of profits on those, so we might be able to get a lot of the better plays now for cheaper. But we will see. Again, I won't be so quick to shop just yet. CRM, I was thinking about it, but they're going to be a little bit more difficult to play. But it reminds me of Target on some of these bigger movers. Had big earnings moves or whatever the reason, like CRM, but they sell off in a longer duration. It's either going to set its own little range or it's going to break out from there. But finally, speaking of ranges, your UVXY, your dollar, your gold, or at least as far as UUP, dollar and gold, but the UVXY, this was interesting. We've been watching this, but now this is now your first day where it's kind of actually sold off lower. So this is very important. This could change the dynamic, and this could tell us a little bit about what's going on. So keep that in mind and be patient, but be nimble. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to tell me what your jersey says about you, and I need you to have no fear, baby. It seems crazy. It seems impossible. It's supposed to, but the gold loves you. I love you. I'm going to see you in the morning. Let's go.